Hi everyone, today we're talking about JD.com, a stock that I've not talked about for a good month or so, but when I talked about this stock last time it got quite a lot of views, a lot of attention. I think it was like my most watched video ever on YouTube, doing the stock market coverage, and it was really good feedback from it, so I thought I'd touch on it a little bit more, talk about from now on what I think about the stock, and yeah, a little bit more detail from last time overall. So if you watch this video, I'm pretty sure you'll be aware what JD is, because you're interested in the stock. But it's pretty much an e-commerce company that pretty much operates mainly in China. This stock is down 61% year to date, and this stock actually was at $50 a share back towards January side of it, but it's been hit by a lot of bad news. We're going to cover the bad news, we're going to look at the company's fundamentals really, and then we'll talk about what I think about JD going forward. So pretty much JD is battling out with Alibaba. JD currently has 30% of the market that it's in, which is not a bad cut of the share really. JD compared to Alibaba, obviously the stock's a lot cheaper. As a company itself, JD seems more of the reliable kind of service with a better reputation than Alibaba. We've experienced ordering from Alibaba, and people I know that have ordered from JD from living in China. Alibaba seems a bit of a company that can use a bit of counterfeits on the website quite often. The delivery side of it isn't as good as JD's. I know JD can pretty much deliver parcels in give it 4 hours after ordering or something on them lines. So the service and delivery side of it is actually really good from JD. But the reason why it's down 61% and down from $50 a share is there's a few reasons. First of all, we had the CEO. The CEO got arrested in America. I can't remember which state it was in, but the CEO got arrested in America early on this year. And even though it's still open, it's not really gone anywhere so far. And the CEO's lawyers have come out and said he's not going to get charged from it, but I think this is the second time for that kind of same reason that he has been arrested, which is a little bit worrying, and that pretty much made the stock go down 16%. So that's something to be careful of, that it's still open. So that's something that could pop up. And when something like the CEO gets challenged, or there's a potential CEO change, that affects the company big time, and that will have probably spooked a few investors, and at the moment it's stopping a few from getting back in. We've had the China economy. The China economy has slowed down quite a bit. That's also affected JD. We've had the trade war this year that affected JD. And also JD missed 3 of its earnings reports this year, and its EPS was going to be $0.46 per share, and that's now down to $0.27 per share. So because that's been cut as well, that affected JD quite a bit, from that EPS being cut. We'll get onto the good side of it overall, and when we look at the good side of it, we've got JD is invested in has companies that have ownership in JD are Tencent, we've got Google, Walmart. So them 3 companies must see something interesting in JD to invest in them. So when you've got 3 big massive backers like that, that's always a good sign. JD's trying to get pretty much across the world now, not just in China. It's trying to work with Google to get into the EU. So you can see that JD is trying to expand long term, which is great. And when we actually look at the fundamentals itself, over from 2000 now to the next year, we're going to see a 19 cents a share growth, which is really good. I think that's nearly double. And we're going to see 20% revenue growth, which is super. So we've got a good earnings per share growth, we've got a good revenue growth still there. And this stock's at $20, don't forget. So it's a really cheap price, and from where it's been down at. So overall, my kind of thoughts for this company is that I'd pretty much recommend this as a buy. It's a really cheap stock to pick a few shares up, and I think this stock should be pretty much valued at about $30 per share, maybe even 40. I think it's definitely a bit undervalued now with the potential it has, and it's expanding. There's a few worrying signs still. China economy growth, CEO. But overall, when you look at the fundamentals of this company, I'm really impressed, and maybe, split that Alibaba JD 50/50, but it's such a cheap stock with so much potential. So in my opinion, guys, maybe it's worth looking at picking up a few shares. That's the video for today, guys. Thanks for all the support recently. Give the video a like, subscribe, and I'll see you on the next video.